Yes, no?
Yes, sir.
Yes,
Yes, sir.
Yes,
All
sir.
right.
sir.
All right.
Yes.
So let's get started.
Yes, sir.
Yes, sir.
Sir.
Sure, sir.
All right. Perfect. Good morning, everyone. I don't know, even before the session started, people are having laughter, not smile. Whatever is the reason, I presume you guys know your internal talks. Now, it's weird. At one point of time, it used to happen when we were present in live, we could connect and we understand the inner joke. But now over the cameras also people are understanding the inner joke. That's nice. Good to see the connectivity. All right. Having said all of that, let's get started with the session. We spend 1.5 hours in today's session. We get closer to the topic. We try to wrap up closer to the topic. We try to wrap up those 2-3 chapters which were open from the revision perspective. We're going to spend some time in understanding how do you approach this paper from examination perspective. I have a quick tipper. All right. So we are going to look into all of that and then we get started with the examination. Whatever test that you've written, we're going to do the valuation of it. All right. Good to continue. Yes, no?
Yes, sir.
Yes, sir.
Yes, sir.
Look at this. My mistake. I chose the time. All right. So sir gave me the flexibility of finding out, choosing the time, and sheer coincidence. Now I regret. After heavy lunch, all right, people are yawning even before I start the topic. Wow. And this is supposed to be revision. My mistake, not yours. Let's get started with the session now. All right. So we quickly spent 10-15 minutes on revising the chapter called dividend. Somewhere some faculty might have taught. Let's see whatever he or she has taught is appropriate or not. Now, declaration of dividend and payment of dividend. Important from exam perspective, going to be a part of the bucket which is going to fetch 35 to 40% in examination. All right. So what all is covered in this bucket? You have your dividend, accounts, and audit and auditors. The first two topics have already been covered. The third topic has been covered or would be covered by your auditing faculty. What exactly is dividend? We understood that under section 2 clause 35, dividend includes interim dividend. We didn't understand head and tail of it. So we went on to understand the meaning of it. What exactly is dividend? Dividend is a portion of the profit which is distributed by the company to the shareholders, to the members of the company. All right. On what proportion? On proportion of the paid up capital that they have contributed towards the company. That's called as dividend. I hope I'm clear. All right. We went on to understand who declares, when does it work out. So there are two types of dividend. The first one is called final dividend. The other one is called interim dividend. Very, very important. The provisions are slightly different. So you'll have to pay attention. All right. Pay attention to the details. The provisions for final dividend and interim dividend are different. When it comes to the final dividend, Chinmay, focus, screen, on screen. Stop fidgeting with things around everyone. Focus on screen. So when it comes to your final dividend is proposed by the board of directors, approved by the members in the general meeting. If it is AGM, then it is going to be a part of my adda point, ordinary business, ordinary resolution if it is AGM. Understood, everyone? This is in case of final dividend. I repeat, final dividend, who proposes? Board of directors. Who declares it? Declaration or finalization or approval is done by the members. Final dividend approved by the members, where in their general meeting. If it is AGM, then it is going to be part of my ordinary business, ordinary resolution, full stop. Everyone crystal clear with the topic? Yes. So this is in terms of final dividend. What about interim dividend? Interim dividend proposed, declared, approved by the board of directors themselves in the board meeting. So a normal board resolution has to be passed. Understood, everyone? Yes. Difference between interim dividend and your final dividend. I hope I'm clear, everyone. Understood? Yes. So we went on to understand under section 123 subsection 3, interim dividend arises. It is declared between two AGMs. How about final dividend? It is declared in the AGM out of the profits of the financials of the company. As simple as that. We went on to understand types of dividend based on the shares. It can be an equity shares or preference shares. If a company has preference shares, goes unsaid, there will be a preferential right which will be given to the preference shares because of the definition. Where is the definition coming? It's coming from explanation to section 43. Preference share capital is a capital which has two preferences or two priorities. First one, in terms of payment of dividend. Second one, repayment of capital at the time of dissolution or winding up of the company. Understanding, everyone? So if it is preference shareholders, they will get the first priority when it comes to the shares, when it comes to the dividend. All right. So it could be cumulative or non-cumulative. What is cumulative? Sir, whether you make profits or not, I don't care. Give me my dividend. This year I didn't make profit. It's okay. You're right. You give me my dividend next year. But I will carry forward the pending amount. You will have to pay me. This is called cumulative dividend. Non-cumulative, sir, if there is profit, if I declare it, you get it. If there is no profit, if I don't declare it, you don't get it. As simple as that. That is the discussion of non-cumulative. Understood, everyone? Understood, everyone? There
Yes,
in the
sir.
session? Yes?
Yes, sir.
Yes, sir.
Equity share capital. All right. Equity shareholders have two types of dividend. One is called as the uniform voting, right? Wherever there is uniform voting, right? One share, whatever the proportion dividend has been declared by the company, they will enjoy that proportionate. Nothing hyphen down. All right. When it comes to the differential voting right, what are differential voting rights? The DVRs. All right. Classic example, Tata Power, Tata Motors, Chain Irrigation, all these have their own DVRs where I will decide, I will distinguish you from a normal shareholder. Why would you do so? Sir, one share 1,000 rupees, you are telling you want the same share at 500 rupees, you want it at 600 rupees. 400 rupees discount that you are getting is not discount. You're giving up some rights, and that is because of the differential voting rights. These are DVRs. I hope I'm clear. So the DVR can be in terms of voting rights. It could be in terms of the dividend rights as well. All right. Let's assume I am declaring one share, one vote, one share, 10 rupees dividend. If it is DVR, I can take away the right. One share, 2 rupees dividend. One share, 6 rupees dividend. It's up to me. I am going to differentiate you from the other voting rights or other uniform shareholders. This is called the types of dividend based on the nature of shares. Second, we have the declaration of dividend, which is coming under section 123, 200% focus. When it comes to the declaration of dividend, subsection 1 is talking about sources of funds for declaring dividend. From where do I give dividend? If it is final dividend, sir, you give out of your profits of current year. You give out of your existing reserves. I have no problem at all. Whatever you do, ensure that you are reducing the component of depreciation and whatever is available that you are giving it to your shareholders. As simple as that. Second source, interesting. Central government, state government, or any other combinations also might have given an authority and approval that we will give you funds for the purpose of declaring dividend. That becomes my second source out of the money provided by central government, state government for the payment of dividend in pursuance of the guarantee, which is being given by the guarantor, by the government. Understood, everyone? Understood, everyone? Yes.
Yeah. Yes, sir.
Sir, should I transfer something to the reserve? Law says if you want, you transfer. If you don't want, don't transfer. Whatever it is, ensure that you follow it consistently. Earlier, there used to be a law. Under 1956, there was a mandate that you have to transfer some funds to your general reserve before you give dividend. Now, law says, sir, do whatever you want. I am not bothered about it. Your company, you manage the way it should be. As simple as that. Understood? Yes. Next, can I use the profits of the previous year or the free reserves for dividend declaration? This is the most important point. Pay attention. Case studies are from here. What is this? Sir, no profits or low profits. I repeat, either no profits or low profits. But I want to declare dividend. Why? Sir, I've been giving dividend and that's how I maintain the name in the entire economy as such, in the entire financial markets. My name is there because I've been giving good dividend. Government companies do that. In that case, now what should I do? Law says, you don't have profits. How are you going to declare dividend? I am saying, sir, I don't have profits, I agree, but I have some reserves. Can I use that for the purpose of declaring dividend? Now here, law says, yes, but with a permission. All right. Yes, but you have to follow certain conditions. Only then you can go ahead and declare the dividend. Now, what are the conditions? Quickly listen to me. The first condition is, sir, whatever losses are there and depreciation which you have not provided for, provide for that. After that, whatever is available that you can use for the purpose of declaring dividend. Understanding? This is the first condition. Second condition, sir, how much rate can I use? Any rate? Entire reserves, I will give it to you as dividend. Congratulations. After that, neither you nor me will be visible. Law says, wait, the rate shall be an average of preceding 3 years dividend that you have given. All right. So it should not be more than the average of the dividend that you have given in the preceding 3 years. Sir, what if I'm not giving dividend in one of the 3 years? Don't apply this condition at all. Don't apply this condition at all. Understanding, everyone? Case studies, case studies, case studies. Third condition. Sir, how much ever you withdrawn, that should not be more than 1/10 of the paid up capital plus free reserves. that should be not more than 1/10 of the paid up capital plus free reserves. Important. Securities premium part of my free reserves or not here? Complete bouncer. Is securities premium a part of my free reserves for this calculation or not?
No.
No, sir.
No, sir.
How do you say authoritatively no? Just in case by mistake, if you remember in the last session itself, my BP rose, seeing your DP with books. That is nothing but the usage of securities premium. And if you carefully think about it, there we have never spoken about giving dividend for two equity shareholders for the purpose of adequacy, non-adequacy, or lesser amount available for the purpose of declaring dividend. Do you remember? My BP rose, seeing your DP with books. All right. P, bonus issue. P, preliminary expenses. D, discount at the time of issue of shares. P, preference shares redemption, whatever premium you're going to pay. And the last one is buyback. Nowhere we have covered dividend declaration. Connect. Everyone there in the session, easy to remember. So here, will free reserves include securities premium? Answer is no. Sir, current year losses have to be set aside from the amount that you have divided. All right. After step 3, whatever amount you have arrived at, from that, please set aside current year losses, whatever amount it is, set aside that loss, and then you're going to use it. And the last thing, after payment of the dividend, your reserve shall not fall below 15% of the paid up capital. Important thing, here it is 1/10 of paid up capital plus free reserves, amount that you're withdrawing. Here we are talking how much should the reserve be left? It should not be less than 15% of paid up capital. Now I'll tell you where the bhel puri is. Students get confused and they'll end up writing in the last condition 15% of paid up capital plus free reserves. Wow. What are you doing? You're first of all finding out how much reserve should be left. For that calculation, you're including reserves and then arriving at the figure. Reminds me of mirror maze. Don't know where I'm getting into, don't know where I'm leaving. I repeat for those of you who haven't understood, where you will mess up. Listen to me. And all of us are laughing at the thrill that how can someone be so lame? Us, in quotes, us, during those 3 hours. Listen to me. What blunder do we do in examination? We will go ahead and consider free reserves for the purpose of calculating the last condition. What is the last condition? The last condition says, sir, after you've withdrawn money from the reserve, how much should the reserves be left? Now, for that also, how can you consider the reserve itself? Am I making sense? I repeat, sir, what is the last condition? The last condition is, sir, how much should the reserves be left? For the purpose of this law says it should not be less than 15% of paid up capital. Now, what students, because of lack of attention, what students will end up doing, if it is a case study, they will consider 15% of paid up capital plus free reserve. Govinda. What are you calculating? Reserves. For the purpose of calculating reserves itself, you've included reserves. Wow. Lipika, didn't understand. I repeat, where is this confusion coming from? The confusion will arise here. Here we are saying the amount that you should set aside should not be more than 1/10 of your paid up capital plus free reserves. This is the amount that I can withdraw. What is the last condition saying? After withdrawal, how much should be left over in that reserve? In that pond, in that lake, how much water should be left over after you withdraw the money from there? All right. So law says the last condition, it should not be less than 15% of paid up capital. By mistake, if you get confused and if you just end up writing 15% of paid up capital plus free reserves, remind yourself, does it even make sense? You're calculating reserves, and for that calculation, how can you include the reserves itself? Now, is it making sense? Now, why am I know this was not necessary, but I'm telling you where we will go wrong. Confusion between third and fifth one. Third one, we will not include paid up free reserves. Last one, we will include the reserve. How fool can we be? I hope I'm clear, everyone. Understood the point? Yes. So until and unless these 5 conditions are satisfied, you cannot withdraw money from your reserves. Don't forget the story. What are we learning? We are learning if I have to remove money, if I have to withdraw money from the reserves, because I don't have profits, I am using my balance sheet money for the purpose of declaring dividend. Process, I'll give you the permission, satisfy 5 conditions, so you can go ahead and declare the dividend. As simple as that. Understood, everyone? Understood? Yes. Can we proceed? Next point. Rule 3 might not be applicable to the central government in case if entire share capital, 200% focus, entire paid up share capital is held by central government, state government, or a combination. Here, blunder. Listen to me very carefully. Central government holds 99.99999999999% of the company. And the company has decided these 5 conditions are not applicable for the purpose of declaration of dividend in case of inadequate profits. True or false? True or false?
False.
Why false?
Only rule 3, sir.
Only rule 3 is nothing but the conditions that we've just come across.
Because it's not 100%.
It is not 100%. That is the answer. I repeat, entire means entire. Entire means entire. Now, just in case if they would have mentioned the 0.00001% is held by state government. Now, what is your answer?
True.
True.
100% true. For those of you who didn't understand the question itself, listen to me. What am I talking about? The point is, sir, these 5 conditions, the Panchatantra story that you've just heard about those 5 conditions, when does it come into picture? In case if I don't have profits, but still I want to declare dividend. Congratulations, go ahead. But satisfy 5 conditions. No problem. Now there's a notification which says these 5 conditions need not be applied in case if you are a government company wherein entire paid up capital is held by state government, central government, or a combination. Now, in this case, you don't have to apply the condition. Where we will get stumped in the examination, they'll give 99.99% is held by central government. All right. And 0.01% is held by public. In this case, can the company go ahead and avoid the entire applicability of Rule 3? Answer is no. You have to apply because entire share capital is not held by central government. Understood, everyone? Understood, everyone? Can we proceed? You guys are counting
sir.
stars as if we have never
Sir.
discussed this. Have we discussed this or not?
Discussed, sir.
Discuss, sir.
Convincing yourself? Okay, let's go ahead. Next. Sir, can I use the capital reserve? Answer is no, you cannot use capital reserve. Why? Reserves are of 2 types. Free reserves, capital reserve. What is capital reserve? Something which is not free reserve. What is free reserve? Something which can be used for the purpose of declaring dividend. So can I use capital reserve for the purpose of declaring dividend? Answer is no. That itself is the basis for distinguishing capital reserve and free reserve. As simple as that. Understood? Yes. Next point. Sir, can I have losses in my books of previous year. Can I still declare dividend out of the current year profits? No, the company shall declare dividend unless and until carried over previous losses and depreciation has been provided. You first provide for your losses. After that, if you have profit, you can use it. Satisfy 5 conditions. Next. Sir, can I use revaluation reserves? Whatever revaluation reserve I have created, can I use that for the purpose of declaring dividend? Answer is no. We went on to understand a couple of case studies. We saw interim dividend. Important. It is declared by the board of directors. Unlike final dividend. Final dividend has to be approved by the members in the general meeting. Interim dividend, nothing doing. In between 2 AGMs itself, I'm declaring this. Where will the general meeting be held? How will the general meeting be held? Am I making sense, everyone? I hope I'm clear. Understanding the point? Yes. Next point. From where you can declare out of the P&L account. All right. Such interim dividend is sought to be declared. How much ever you want, you have to declare out of the P&L account of this year. All right. So let's assume there are losses this year. Cumulative, let's assume Q3 I'm seeing. All right. Q3, there are losses. What does loss say? Please go check Q2. Do you have profits? If you have profits up to Q2, use that profit for the purpose of declaring dividend. Understood the point? No. Listen to me. Q3, I have profits. Use that, declare dividend. Q3, entire year to date for all the 3 quarters, cumulatively, if I see, adding up all the 3 quarters, cumulatively, I'm making losses. Losses, go check immediately preceding quarter. Are you making profit or loss? Q3, including Q3, I'm making losses. If I consider up to Q2, I'm making profits. In that case, what should I do? Consider up to Q2 and declare dividend. How much? Average should not exceed more than 3% of your preceding, or more than the rate of dividend, average of the rate of dividend of preceding 3 years. That has to be considered for arriving at your profits or dividend. Understood, everyone? I repeat. What am I talking about? A scenario where, sir, till quarter 3, Q1 plus Q2 plus Q3, I have losses. Still, I want to declare dividend. When it comes to interim dividend is declared out of the profits of only this year. I can't use my reserves for the purpose of declaring dividend. Am I making sense? Because if I'm using reserves, that is only possible in case of final dividend. Interim dividend, you can't use the balance sheet. Only P&L account. First of all, I'm declaring dividend between two AGM. Upon that, you want to use my erstwhile profits. Not possible. Don't. How is it possible then? For all the 3 quarters, cumulatively, I made losses. I still want to declare dividend. Fair enough. I'll give you an opportunity. Check your preceding quarter. Have you made profits? Up to your preceding 2 quarters, if you made profits, consider that and go ahead and declare dividend for the purpose of your interim dividend. How much? Average of not more than 3 years average of dividend declared. Understanding everyone? Understanding everyone? Yes, no. I repeat, Priyanka. During the current financial year, up to the end of the quarter, immediately preceding the date of declaration, such interim dividend shall not be declared at a rate higher than the average dividend declared by the company in the immediately preceding 3 years. So what is happening? Let's assume 4th of January 2024, I have decided I will give interim dividend. All right. Or let's assume, to make it simpler, 4th of November 2024, I have decided to go ahead and declare dividend. As on 4th of November, do I have profits during the current year? Answer is no. There are losses. Cumulatively, up to 4th of November, I made losses. So what losses? No, sir, I still want to declare dividend. No problem. I understand your emotion. Check up to immediately preceding quarter. When would it be? Preceding quarter would be 30th of September 24. Up to this quarter, have you made profits? If the answer is yes, go ahead, declare dividend. How much a rate? A rate is going to be average of the preceding 3 financial year. That's it. Understood? Understood, everyone? Yes. The rest is all simple. When it comes to your declaration, it has to be transferred to the schedule back within 5 days. Let's quickly go to the chart itself. That will make our life easier. All right, we'll go to the chart. If you see, what does law say? Once you have decided that you want to declare dividend, all right, within 5 days, transfer it to a separate bank account. All right. Now, once you have gone ahead, decided within 30 days from the date of declaration, that has to be paid. All right, you have to pay it. 5 days, transfer it to strict dad's pocket, so that the payment will go out of that bank account. What is this 30 days? You have only 30 days. Doesn't mean that you have transferred it to some bank account. Doesn't mean that you paid. No, you have to pay it to the respective members. How many days do I have? 30 days. Within 30 days, I have to make the payment. Sir, sorry, I forgot. I'll give you 7 days. 7 days for what? Within 7 days, transfer it to another account called unpaid or unclaimed dividend. I repeat, 30 days over. Now, no waiting. 7 days extra time nahi mil raha hai. You are not getting 7 days extra time. I hope I'm clear. 7 days for what is it? For transferring it to another strict dad's pocket, which is called unpaid dividend account. Understanding? Yes. If you don't do this as well, no problem. Simple interest of 12% per annum. All right. Per annum interest will be leviable. Now, wait for some time. All right. Let the shareholders take the money from this account. Sir, sorry, sir. Nobody is coming and taking this dividend at all. 7 years you wait. Year 1, year 2, year 3, 4, 5, 6, 7. Wait. Nobody turns up. Transfer the entire dividend along with the interest to the grandfather called IEPF. All right. So if this is father, strict father, this is the strict grandfather. All right. Transfer it to IEPF. Now, if this entire exercise of transferring is happening for 7 consecutive years, all right, for 7 consecutive years, if you have been transferring one person's dividend to IEPF, I don't want you to wait anymore. Transfer his shares also to IEPF. Understood? Sneha. First time blunder. What? The person didn't take the share dividend. All right. Law says wait for 7 years. Within 7 years, if that person is not taking the dividend, transfer the dividend and interest to whom? To IEPF. All right. This is going to happen 7 times. 7 times for the same Sneha. I've been transferring the amount to IEPF. Law says Sneha is there or not. She might be there, but with her eyes wide closed. So let's ensure that shares are also transferred, not just the dividend. Your shares would also be transferred to IEPF. Understood? Very, very important topic. You will get confused here. First 7 years, wait for transferring the dividend. 7 consecutive years. If the same thing is happening every year, all right, in that case, transfer the shares as well to the IPF. Now you might be thinking that means 49 or what? 7 into 7, 49 years. 100% those of you are laughing, you are the first one who might have thought. All right, listen to me. Listen to me. 0. All right, day 1. 30 days started, IPF, the money is lying in your unpaid dividend account. Understanding everyone? Year 1, 2, 3, till 7 years, I'm going to wait. All right. This is the first time when the dividend was declared by the company and it is sitting in your UPDA. UPDA is your unpaid dividend account. Understanding everyone? Yes. 7 years you wait. After 7 years, transfer it to strict that called IPF. This happened in year 0. Same thing in year 1 also, I have declared dividend. I've declared dividend, person didn't take. So here again, my 7 years are going to start for transferring dividend. The same thing, I declared dividend in year 2 also. 7 years I've waited, nobody took. I will transfer it to again IPF. So 7 into 7 is not the calculation for those of you who haven't understood. It's not 49 years. Most of you didn't understand, first of all. All right. Second, just in case if you understood slightly here and there, don't get confused. I will repeat the entire discussion. I thought it was revision. Nevertheless, year 0. Today I've declared dividend. 7 years I will wait. This, let's call this as D1. All right. Dividend 1 or dividend of year 1. D1 I've declared. Nobody is taking. 7 years I will wait. No one is coming. I will transfer the entire D1 to IPF. Simple. Now year 2 also I've declared dividend. Let's call it D2 also. I will wait for 7 years. I'm going to wait. I'm going to transfer it to. Just give me a second. Is the screen visible now? D1 is the year 1 dividend.
Sir.
7 years I've waited. I will transfer it to IPF. Understanding? Yes, I will transfer it to IPF. Year D2, I've declared it in 2011, 2012. I will wait for 7 years. If no one comes up, I will give it to IPF. 2013, T3, waited 7 years. Nobody took, transfer it to IPF. The same way till 2018. I have been waiting. All right. Or rather 2017, I've been waiting. Nobody is coming. All the amount has been going to IPF. Now what does law say? Don't wait any further. Not just the dividend, transfer even the shares in D8. That is in 2018. You're not just going to transfer the dividend, you're going to transfer the shares as well. Understood? Understood. So it is not 49 years. Most of you didn't understand, sir. What is this 49 that you're referring to? 7 into 7 by mistake, 7 years dividend has to be transferred for 7 consecutive years. If I've been transferring the dividend, shares also have to be transferred just by mistake. If you've used your extra brains, don't. That is not the logic, and that's what I've proven just now. Understood?
Yes, sir.
Yes, sir.
Yes, sir.
All right. Things as well. Now, once everything is put up, all right, once it is there in your unpaid dividend account, 90 days you get, within 90 days, put it up on your website as well. All right. With this, we go to section 125, which talks about your IPF. So what is IPF? It is your fund which is available for investor education protection. All right. This amount is available for your investor education protection. So what happens? All the dividend which is not paid, all the deposits, all the redemptions which is not being given to the members will all go and sit in my IPF account. For what can I use it? You can use it for repayment. You can use it for promotion of your education awareness. You can use it for legal expenses. You can use it for any of the disgorged amounts. This is the usage of IPF. Next, section 126. 126 talks about keeping shares in abeyance. What is this whole discussion? All right, keeping dividend, right shares, and bonus shares in abeyance. Abhay has transferred the shares to Achitriya. Now, the point is, the moment Abhay has transferred, he has come to me and he's asking me to please go ahead and transfer the shares as well and issue a new certificate to Achitriya. Right now, don't come now, come later. Audible? Audible?
Yes, sir.
Yes, sir. Yes, sir.
Then, what am I going to do? Abhay, and in the meantime, I've declared dividend. Now, to whom should I give? If I give it to Abhay, Achitriya is going to file a case against me. If I give it to him, Abhay is going to file a case against me. I am telling I don't want headache at all. Let me keep it in hold. All right, let me keep this entire amount on hold. This is called pending abeyance or keeping it on hold until the registration is finalized. This is section 126 all about right to dividend, right shares and bonus shares to be held. Transfer the shares.
Yes.
Audible?
So you were stuck.
Now am I audible?
Yes,
Yes, sir.
Right. Fair enough. Can we continue? This
Yes,
is about
sir.
your 126. 127 talks about punishment for conduct. Just case.
So your voice is breaking.
What if I get at the top? Just give me a now. Is it audible now?
Yes.
Sir.
Yes, sir.
All right, perfect. So 127 talks about the penalty. Just in case if you don't follow whatever we've just discussed, then there is repercussion. There are repercussions which you will have to face, and interest is also going to be 12%, 18% as the case maybe. 12% in case if you don't transfer it to IPF, if you don't transfer it to unpaid dividend account. And apart from that, just in case if you haven't given the you've declared and if you've not paid to the shareholders, you will also be paying 18% of extra dividend, extra interest as penalty. One is going to be interest, the other one is going to be the penalty. I hope I'm clear, everyone. Understood? Yes. This is the whole discussion on dividend. Now, can we go ahead and start accounts of companies? Yes, they're in the session.
Yes.
Yes, sir.
All right. I thought dividend should get over in half an hour, rather 15-20 minutes. It has taken exactly half an hour. Nevertheless, now we're discussing the entire topic is on accounts of companies, right? From section 128 onwards. 200% focus. Let's get started. Can we start? Yes.
Yes, sir.
Yes, sir.
Important from exam perspective goes unsaid. All right. Section 128, subsection 1. Brilliant discussion that we had. The loose word that we use often, etc. Just so colloquially we use. I hope you remember our whole deliberations on the discussion or deliberations on etc. as a word. So what is section 128 talking about? Section 128 subsection 1 talks about how do you maintain books of account. All right. So every company is supposed to maintain books of account, books and papers, not just books of account, books and papers. This etc. is all revolving around books and papers. I hope I'm clear, everyone. They're in the session. Audible?
Yes,
Audible?
sir. Sir.
So you're stuck again.
Sir.
Audible?
Sir.
Yes, sir.
Sir.
Apologies.
Yes, sir.
Apologies to everyone. And let's continue. All right. So section 128, subsection 1 is talking about books of account. All right. Very important. The word etc. that we have used in section 128, subsection 1 is revolving around books and papers or books or papers. I hope I'm clear, everyone. Understanding? Yes. So what is section 128 subsection 1 talking about? It says, sir, every company has to maintain books of account. How? Accrual basis or cash basis? No option. Accrual basis. Sir, single entry or double entry? No option. Double entry itself, in such a manner that it can give a true and fair view of the company's fair state of affairs. Understanding, everyone? Yes. So this is what section 128 subsection 1 makes it clear. All right. Now let's go ahead and check the other provisions. Can I get the rights? Quick. All right. So this is the whole discussion when it comes to your companies. All right. Section 128 subsection 1. You have to maintain on accrual basis. You have to maintain on double entry system. Sir, what is books and papers and books of account? Is it one and the same? Answer is no. All right. Section 2 clause 13 says books of account definition. It is anything which covers your cash book, balance sheet, P&L, and costing records. Understanding, everyone? I'm not giving the definition. I'm giving the meaning. If you want to understand the definition, it is to talk about all those records which are maintained for the purpose of giving details of receipt and expenditure, sales and purchases, assets and liabilities, and items of cost, which is nothing but your costing records. The second thing that you will have to remember, books or paper, wide enough to cover books of account as well within itself. All right. So books and papers covers your books of account, deeds, vouchers, minutes, documents, registers, which you are maintaining. Sir, I'm maintaining it electronically. Is it okay? I have no problem. You maintain it however you want. That is covered within the ambit of section 2 clause 12. 2 clause 12. 2 clause 12. Making a note, everyone. Books of account, 2 clause 13. Books and papers, 2 clause 12. Understood? Let's proceed. We went on to understand. Very important, sir. I want to keep it somewhere else. Can I keep it 100%? Go ahead. Keep your books anywhere else. But your board of directors have to give an intimation within 7 days to your registrar of companies. Very, very important. Understanding? Yes. Then we went on to understand maintenance of books in electronic forms. Can I maintain it? 100%. Yes. But there are a few rules and regulations which you will have to adhere to. Very, very important point. Servers should be located in India. Very, very important. Now, let me quickly give you an example. Google, when it comes to your various companies, Microsoft and all of these companies have their books maintained in electronic form. But extremely important condition is server should be in India. So somehow they have to create a backup of the data in India as well on a server. I hope I'm clear, everyone. Understanding? Yes. Next. Sir, apart from that, one very important proviso which was introduced. In case of your maintaining document, if you're using any accounting software from April 1st, 2023, you have to ensure two things in your software. One, it captures an audit trail. All right, it is recording an audit trail. What is audit trail? Right from inception of the transaction till the final end. Everything is captured in it. Second thing, it should have an edit log. Who has changed it? What was changed? And these two features should not be disabled. Only then it is appropriate to maintain books of account in electronic form, or else it is not acceptable. Understood, everyone? Yes. Then we went on to understand books of account in branch offices. Whatever documents you maintain at branch offices, I don't care. Subsection 2 says you must send your accounts, summary of it, on a periodic basis to your head office, so that head office can consolidate it and give me one single financial statement at the end of the day. I hope I'm clear, everyone. Understanding? Yes. Then we went on to understand inspection under subsection 3 and subsection 4. Can the director inspect it? 100% yes. But if you want to inspect your subsidiary, I need a board resolution. Very, very important. All right. You must be authorized by board resolution if you want to inspect your subsidiary books. Subsection 4 says whoever are the employees, just ensure you are extending all the possible assistance to the directors who are reviewing it. We went on to understand preservation of books of account. Books of account under subsection 5 are to be preserved for 8 financial years. Understood, everyone? Full stop.
No, immediately proceed.
Time and again, I've clarified this. You cannot use the language just 8 financial year. All right. It has to be 8 financial year immediately preceding a financial year. This is extremely important phrase when it comes to subsection 5. All right. I am sure none of you would make this mistake because you have understood the difference between just 8 financial years and 8 financial years immediately preceding. I hope I'm clear. Understanding? Then we went on to understand subsection 6, which talks about who are responsible to maintain. Subsection 7 talks about the penalty in case if you don't follow. 129 subsection 1 important talks about your financial statement. Financial statement has to be prepared such that it gives a true and fair view of the company. Entire SA 200, entire audit report, entire SA 700 is revolving around this. All right. How are you going to give your audit report? Whether SA 700 is giving an unmodified opinion. So that is talking about giving a true and fair view. I hope I'm clear, everyone. Understanding? Yes. When it comes to 200, it says that audit such that the financial statement and financial information gives a true and fair view of the state of affairs of the company. There in the session? Everyone?
Yes,
Yes,
sir.
sir.
Next, sir, should I follow accounting standards? No option. You have to follow accounting standards. Sir, can I follow any other format for presentation? No option. Schedule 3 has to be followed unless otherwise provided by the respective act, where a liberty is coming, not just under section 129 subsection 1, but under section 1 itself. If there is a conflict, inconsistency between your company's act and your respective act, you please follow your respective act. If you remember section 1, we have learned this in detail. Understanding? We went on to understand subsection 3, consolidated financial statement. If you are a company which is having a subsidiary, language confusion, bhelpuri, if you remember in the session we had discussed. All right. When it comes to section 129 subsection 3, act is still using the language subsidiary. There used to be an explanation earlier which says subsidiary shall include associates and joint ventures. Now law is not bothered about that explanation. They're just restricting to the language. You will have to consolidate your financial statement with your subsidiaries. However, there's a catch. There's a catch. Rules are still having the language of associates and JVs. Understanding, everyone? We've discussed this. So when you're consolidating your financial statement, you will have to consolidate your subsidiaries, your joint ventures as and the associate companies as the case may be while you're consolidating. Format same as you were using for your standalone financial statement. Extremely important exemption from preparation of CFS. You don't have to prepare CFS. Boring, sleepy, there in the session.
There in the session.
Priyanka, Varshini, Srivasudev, Naveen, Roja, there in the session. Respond
Yes,
quickly.
sir. Yes,
All right. When it comes to exemption, 3 conditions to be satisfied. First condition, you are a subsidiary, either wholly owned or partially owned, I don't care. All right. If you are a subsidiary and your members have given in writing that they don't have any problem if you don't prepare a CFS. Example, A holds B, B holds C. I am talking about should B prepare the consolidated financial statement? Answer is yes. General piece of law, answer is yes. B has to prepare consolidated financial statement of whose? B and C. Should it include A? How on earth can it include A? I'm consolidating financial statements of subsidiary, associates, and joint ventures, not of holding company. I hope I'm clear. Understanding? Now, should B consolidate financial statement? Answer, general piece of law, yes. Exemption available. 3 conditions to be satisfied. First one, it is a subsidiary. Of whose? Someone's subsidiary, I don't care. Wholly owned, partially owned, I don't care. Is it a subsidiary? Answer is yes. It's a subsidiary of A. And the members of B should say, we don't have any problem if you don't give us consolidated financial statement. But orally, is it okay?
In writing.
No, sir. Integrated in writing.
In writing. All right. Second condition says, sir, it is neither listed nor in the process of listing. Why? Sir, because if you are listed by default, you will have to prepare consolidated financial statement. There's no option. SEBI is there to mandate that. All right. So if you are not listed or not in the process of listing, I have no problem. Then you can go ahead and think about the exemption. Third condition, somebody in the group has to prepare. So that is going to be your ultimate holding company is preparing the CFS. As long as 3 conditions are satisfied, I will give you the permission of not preparing a CFS, or else general piece of law. General piece of law. Am I supposed to prepare? Answer is yes. You have to prepare. No option. Understood? Understood? Can we proceed? We went on to understand. Subsection 4 says, sir, whatever law you've seen that has to apply for a standalone statement, whatever law is applicable, that applies to a CFS as well. Subsection 5, important. It says, sir, you have to follow accounting standard under subsection 1. I clearly mentioned. Under 129 subsection 1, I told you have to follow accounting standard. No, sir, I can't follow. 3 things. First, give me what is the deviation. Second, give me the reason for the deviation. Third, how much is the financial effect of this deviation? All these 3 things. If you disclose in the financial statement, I am okay. Don't bother. You don't have to follow this. All right. You don't have to present it accordingly. Understood, everyone? Crystal clear? Next, 129 talks about the penal provisions, penalties. 129A, very interesting. It talks about when it comes to a company, all right, which is unlisted company. Pay attention. Pay attention. unlisted companies will have to give their periodical financial statement. Earlier, it used to be every listed company, every quarter used to give their financials. Now law says not just your listed, I want these unlisted companies also to give their periodical financial. What is periodical? It could be quarterly, it could be semi-annual, it could be fortnight, it could be monthly. Government has to yet come up with their rules here. They haven't come up anything on this. So when it comes to section 129A, those unlisted companies also have to give their thoughts. They will have to give their periodical financial statements. Is it enough if I just give the financial statements? To whom should I give? You have to give it to your registrar of companies. Within how many days? Within 30 days from the end of the period. Sir, is it okay if it is unaudited? No, it has to be audited, or at least a limited review has to be carried out. Congratulations, all the future chartered accountants, you get work from here. Think logically. Yes, because earlier I used to do it once in a year. Now law has mandated I have to do it quarterly, semi-annual, as the case may be. So I'll have to carry out the audit, not at the end of the year, but every quarter I'll have to close the financial statements. Understanding everyone? Yes. Then 134, important, talks about your financial statement, board report, etc. The first subsection is about financial statement. Who has to sign it? Chairperson, 2 directors, out of which one shall be MD. Your CEO, your CFO, your CS. These 2, if they have been appointed, all right. If your company has appointed a CFO and a CS, they have to sign it. Sir, 1-person company, only by 1 director, it should be more than enough. I don't have any other problem. Then we went on to understand subsection 2, subsection 7. Every auditor's report, all right, every financial statement should have an audit report. Sir, apart from that, ensure you're giving a notes to account. You're also giving, very, very important, board's report whenever you're sending out any financial statement. Whenever you're sending out any financial statement to anyone, sir, consolidated financial statement applies. This applies to both standalone and consolidated. Sir, what are you talking about? Listen to me. Subsection 2 says, sir, if someone is asking you financial statement, just don't give him financial statement. Ensure you give him audited financial statements. It shouldn't be unaudited. How will I know if it is audited? Ensure that the audit report is there along with it. First thing. Second thing, if whenever someone is asking you financial statements, don't give, or whenever you're publishing any data, don't publish only your standalone financial statement. What all should you give? You have to give your board's report, notes to account, and audit report, all the 3. Or audit report, notes to account, and board's report, all the 3 have to be given whenever financial statements are asked. Understanding everyone? Yes. There in the session?
Yes, sir.
Yes,
Yes, sir.
What is there in this board's report? It talks about the performance of the company during the year. How have we done? What all we have done? How many meetings were there? What changes happened during the year? What was the business? What didn't change? What was changed in terms of the directorship? Whose period was extended? Was anyone reappointed? Was anyone retiring? Give me the details of all of this. This is called board's report. Understanding everyone? We've seen entire board's report once earlier, if you remember. All right. We've seen entire board's report once earlier. Then in the session, everyone.
Yes, sir.
sir.
When it comes to your OPC, sir, what should OPC give, sir? OPC, if you give in your board's report, your remarks, your comments against what, sir? Against what auditor has given. All right, let's assume auditor has modified his opinion. He's given a qualified opinion. You give me your comments on that. That should be more than enough itself as a board report. I don't want anything else. I don't want anything else. That itself is a board report. Understood? This is the whole discussion on board's report. Extremely important. Next comes subsection 5. In your board's report, if you remember, there is something additionally to be given in the board's report, which is called DRS. What is DRS? Director's Responsibility Statement. Now, under subsection 5, what exactly is to be covered in DRS is covered here under subsection 5. So what is to be covered in your director's responsibility statement? First one, accounting standards have been followed or not. Accounting policies have been applied or not. Directors have taken all the sufficient care, proper and sufficient care for maintaining accounting records, safeguarding assets, preventing and detecting frauds. Have you used going concern or not? If you are a listed company, have you followed IFC or not? These are the 5 clauses, and the last one is whether you have proper system to find out all the laws are appropriately being followed or not. And if it is not being followed, are you able to detect those non-compliances or not? 6 things to be covered as a part of your director's responsibility. Understood? I will not be surprised if this comes up in your examination. 6 marker can come in your examination, or it could be a 4 marker in your examination. What is director's responsibility statement? Can I just write 4 points if they ask for a 4 marker?
No, sir.
No, sir.
You have to write all the 6 points. Why? Because this is an exhaustive list. This is not inclusive. This is an exhaustive list. Only these 6 points can come in your DRS. Nothing else can come. It's as good as, can I add anything extra in my MOA? Apart from no class?
No.
Apart from no class, can I add anything extra in my MOA? Answer is
No,
no.
sir.
Same way, DRS also, you can't add anything beyond these 6 points. I hope I'm clear. Expecting a question. Next point. Signatures on the board's report, something that we have already touched upon. Internal audit, extremely important discussion. If you remember, internal audit, ILCD. Listed companies, I don't have to talk for all the listed companies, internal audit is applicable. Unlisted public companies, check for the conditions. ILCD. What are the conditions? 200 crores, 100 crores, 50 crores, 25 crores. Sir, what are you writing? We are not able to understand. I stands for turnover. L stands for your loans. C stands for your capital. D stands for your deposits. If any of these 4 parameters are crossing this limit, internal audit is applicable in case of unlisted public companies. Our private companies, sir, private companies just check for I and L. What is the condition? 200, 100. Same as what we have seen. CD is not applicable in case of private company. Understood? Understood, everyone? D, very obvious, it can't apply. It's deposits. Common sense? Common sense? Yes. Now you might come up with your own common sense telling, sir, private company can't take deposit from member. Although you didn't think about it. You didn't think about it. All right, stop pretending at least. I am clarifying here. We are not talking about those deposits. We are talking about deposits in general, which is more to do from the public. Can I do it? Answer is no. I can't. So there's no question of applying. So it is just going to be limited to I and L. Understood, everyone? Understood, everyone? Crystal clear? We went on to understand section 135, which talks about the CSR. All right. Entire CSR provision is extremely critical from exam perspective. You can expect questions. We are going to quickly run through. When it comes to your CSR, law says, sir, you're going to spend some amount. To whom is it applicable? First of all, quickly tell me the limits. Tell me the limits. To whom is CSR applicable? Quick. I thought you had a test on accounts, right? There in the session, everyone?
Yes,
Yes,
sir.
sir.
Yes, sir.
I thought I'm doing a revision. What is the applicability of CSR to everyone? It is applicable.
No, sir.
Whom is it applicable?
Net worth of 500 crore, turnover of 1,000 crore,
1,000 crores or more, net profit,
profit of 5 crores.
5 crores. Doing, immediately leading financial.
Scary, yeah? Very scary. If any of these limits are breached in the immediately preceding financial statements, then CSR is applicable. How much is the amount that you will have to contribute? 2%.
2% of average net profit.
Average net profits. Average of what? Average of net profits. Net profits of which year? Preceding 3 years. Sir, in case if I have not even existed for 3 years, how many years you were in existence? Consider that itself for the purpose of your calculation. Understood? Scary,
Yes, sir.
scary. Not really happening. Huh? Anyway, so earlier it was just a matter of giving you the permission. If you want, you donate. If you don't want, don't donate. If you don't donate, give it in your board's report why you didn't donate. As simple as that. Now it is mandated. The moment you are having or covered within CSR ambit, CSR has to be made. How do we go about with it, sir? Sir, the moment you have agreed upon, if you could not spend it, check what kind of project it is. If it is not an ongoing project, transfer the entire amount to your strict debts pocket, which is Schedule 7 funds within 6 months from the end of the financial year. What are we talking about? Sir, I have to spend 100 crores. For this 100 crores, I could not spend entire amount today. I hope you realize 100 crores, it's not necessary that it'll get over together at one shot. You check what kind of project is this. Is it an ongoing project? Ongoing project means it is spread across certain period of time. It need not happen within 1 or 2 months. It will take some time. It might take 2 years. It might be taking 3 years. In that case, law says, if it is not an ongoing project, how much ever you could not spend, transfer the entire amount to your strict tax pocket. I don't trust you. Transfer the entire amount to your Schedule 7 fund. Within how many months, sir? Within 6 months from the end of the financial year in which you were supposed to transfer, you were supposed to spend, you couldn't transfer it. If it is not an ongoing project. If it is an ongoing project, I understand that you cannot spend the entire amount at one shot and you not want to put it in your Schedule 7 fund. Because once you put it there, it is not easy to retrieve. In that case, I want you to transfer it to another account called as UCSR. What is UCSR? Unspent Corporate Social Responsibility Fund. All right. Here you are going to transfer within how many days? Within 30 days from the end of the financial year. This is not as strict as Schedule 7 DAD. Understanding? That's why I'm transferring it to a lesser strict DAD so that whenever I want, I can withdraw it. Important thing. Sir, if you don't go ahead and spend within 3 years, I've asked you, please spend within 3 years. If you don't spend within 3 years this amount, why? It's an ongoing project. At least within 36 months, it should get over. If you can't finish it within 36 months as well, then there's something wrong. Transfer the entire amount to your strict DAD's pocket, which is your Schedule 7 fund. Understood, everyone? This is entire discussion on CSR. Very, very important from exam perspective. Section 130 talks about reopening of books of accounts on court or tribunal's order. If there is a scenario where the court or tribunal is ordering to go ahead and open the books of account, you have to open your books of account. When can it happen? Two scenarios. One, if there is a fraud, all right, if there is a fraudulent conduct of business so that you can carry out some fraud with a preconceived notion of having a problem for your creditors, then I will go ahead and ask you to open your books of account. Classic example, Satyam. All right, the books were reopened. I hope you remember the discussion. All right, tribunal is going to order. Second, where the affairs of the company are mismanaged, they are not being managed appropriately, I will ask you to open your books of account. For how many years can I reopen the books of account?
8 years, up to 8 years.
8 years immediately preceding the financial year.
It is going to be 8 years. Very, very important when it comes to reopening of books of account. Voluntary revision. I got to know that there is some problem in the financial statement. I want to revise it. Can I do so? Answer is yes, you can do so. In case of you, if you are of the opinion that the financial statements, your board report or your consolidated financial statements are not giving an appropriate picture, you can go ahead and revise it. But up to how many years? Up to 3 financial years immediately preceding the financial year. Only these 3 years you can open your financial statement. 130, 131, very, very important difference. 130, court is ordering. 131, you are doing it on yourself. This is the difference. Understanding, everyone? 132, Constitution of NFRA, your National Financial Reporting Authority. This is an authority which has been brought into existence so that accounting standards on auditing entire financial reporting can be structured. Earlier, this authority was called NACAS. All right. Earlier, this authority was called NACAS. Now it is called NFRA. Understood, everyone? Yes, simple topic. Then 133 talks about central government has the power to go ahead and prescribe the accounting standards. It could be the normal routine accounting standards that we follow, or it could be your Ind AS, as the case may be. It has to be followed by the company. All right. How is Ind AS applicability? Your accounting faculty will take you through, but very important, whenever accounting standards are recommended, it will be after consultation and taking the recommendations from NFRA and ICAI. All right. This is about section 133. 136 talks about right to members to the copies of audited financial statement. All the members have a right to ask for a copy of the financial statement. Sir, I didn't give. I will wait for 30 days. Within 30 days, if you don't give, is it 30 days or 7 days? What is the limit?
Sir, 7 days.
Check. I thought I
21 days.
Pay attention. Section 136 is about giving 21 days of time limit. All right. Pay attention. Within 21 days, if you don't get the reward, then you will be liable for a penalty of 100 rupees per day. All right. Understanding, everyone. Yes, extremely important when it comes to section 136. 137, whatever financial statements that you have prepared, that has to be filed with the registrar under section 137. With this, we come to an end of company law. All right, we've seen each and every chapter in length and breadth. Share capital, we are going to touch upon. Before that, let's quickly go ahead and discuss your other laws. There in the session, everyone?
Yes, sir.
Yes, sir.
200% focus. Let's quickly go to your other laws. Extremely important. Don't miss out on this. All right. Now, when it comes to your other laws, the first one is understanding your interpretation of statutes. What is a statute? Statute is a legal framework. All right. It is the written will of the legislature. How the law wants you to follow, or how do you go about with appropriately understanding and interpreting law, that is covered in your interpretation of statute. All right. When something can be easily understood, there is no question of interpretation. When does interpretation come into picture? If there is any amount of confusion, you artificially don't create confusion. If there is a possibility of confusion, then you have to apply the principles of interpretation. Understanding, everyone? Yes. We saw exactly what are the types of or rules of interpretation. 200% focus on screen. When it comes to your rules of interpretation, there are 6 primary rules and the rest are all called secondary rules. What are primary rules? The first one is called rule of literal construction. Literally understanding and applying to each and every word, giving meaning to each and every word in a law is called literal construction. This is also called litera legis. This is also called litera legis. On screen, everyone. Second, rule of reasonable construction. There is a possibility that reading a law, there might not be an appropriate answer that you might get, or it might become ambiguous. All right. There are 2 ways of reading law. One which says impossibility. The other one, if you interpret slightly different. All right. That is more reasonable, that is giving you more certainty. If there are 2 such interpretation, consider the one which is reasonable, which is certain, which is giving effect to the law in an appropriate terms. That is called as rule of reasonable construction. Rule of harmonious construction. This is a rule where if there are 2 conflicting provisions on a piece of a law, ensure that you are giving a consistent harmony to both of it. Both of it are being considered and then applied. Sir, not possible always. If it is impossible to harmonize and read law, then try first. Latter provision will override the former. The one which is come latest, that will override the oldest. Second thing, specific shall override general. Understanding, everyone? Yes. Whichever law is specific, that is going to apply over the general one. This is on the second point. Third, fourth one, rule of beneficial construction, also called mischief rule, also called Turquoise rule. Correct?
Hayden's rule.
No, sir.
There are 2 rules wherein we are using a reference of another case law altogether. We call those rules with another case law reference. That is either Hayden's rule or it is called Turquoise rule. Turquoise rule is nothing but, if you remember, there used to be a doctrine. Which doctrine? Indoor management. All right. There we call indoor management as Turquoise rule. Can they ask all this in CA intermediate? 100% they can ask. Second, when it comes to Hayden's rule, this rule says, sir, whenever you're reading law, you should interpret law in such a way that the one can reduce the mischief, can suppress the mischief, and give more remedy to the people, advanced remedy to the people. That will be considered as rule of beneficial construction. The next one is rule of exceptional construction. At times, usage of words and or might not be appropriate. In that case, I will have to read them otherwise. Example, small company definition. Everyone started using this when 2013 came into picture, where or was read, rather, and was read as or. Ideally, in the law also there was a mistake, but people started reading it inappropriately. That's when rule of exceptional construction came into picture, where they said, you can't read this as or, you have to read this as an and. Supposedly, later on, they made the change in the entire act itself. This is coming under your beneficial, this is coming under your exceptional construction. The last one, agistum generis. What is this agistum generis? Something that you've been doing right from your childhood. Randomly use words like etc., others. When you don't know something, you end up using etc. That's you have done because you didn't know the law. Now I'm asking you to do that because you have to understand the meaning of the word etc. from its predecessors. All right. When it is going to be following, or when it follows a series or category of words, the meaning of this general word will get the meaning from its general word, specific words which it is following. Example, lion, tiger, etc. The word etc. gets its meaning from the category to which lion, tiger belongs to. Can I include cow here? Answer is no. The answer etc. cannot cover cow here. The whole reason being lion, tiger are specific to a category. Understood? The next one is secondary rules. There are three important Latin principles that you are going to come across. Pay attention to the details, everyone. All right. The first one is called, pay attention to the details. First one is called expressio unius est exclusio alterius, expressly mentioning something will remove all the alternatives from the definitions. Understanding? Example, land. Here, land, house, and coal mines. Expressly mentioning coal mines here will remove gold mines and all the possible mines which can come in your mind. Why? Because expressly, if I'm mentioning something, it will remove all the alternatives. This is the first principle. Second one, nocitor asosis, construction of associated words. Whenever there are words which are having other words as well along with it, that word will derive its meaning from the associated words. So what you're talking, we didn't understand. Cosmetics, perfumery, toilet foods. The word perfumery is going to get its meaning from its associated words. And this is called as nocitor asosis. I hope I'm clear, everyone. Understood? Yes. The next one is, pay attention, contemporaneous expositio. What is this? Sir, whenever you're reading law, whenever you're reading and understanding or interpreting law, you have to bear in mind what was the position, what was the condition at that point of time. All right. What were the rules, regulations? What were the other orders, circulars, notifications which were issued at that point of time, which was prevalent when this law was framed? That has to be considered while you're interpreting statute. This is called contemporaneous exposition. Often asked in examination. You can expect one short note question from any of these. All right. Internal aids of interpretation. What all can you use for your interpretation? First one, title. It can be a short title, long title. I might not want to get into the details. We have discussed this length and breadth. All right. The second one is called preamble. Preamble gives me the objective of this entire act. Example, preamble of Constitution talks about how we are giving more importance to your democracy, how we are giving more importance to your secularity, sovereignty, fraternity, and all of it. Understanding? Yes. So this is the whole discussion about your preamble. Every chapter, all right, your entire act is first divided into chapters. Chapters have headings. Those are nothing but the title to which that particular topic is relating. All right, it's a title to a chapter. Next, you have marginal notes. Marginal notes are section titles. There's something that we have seen. I have shown a practical example as well. It gives me the title to the section. Can I use it for interpretation? You might want to use it in case if there is any ambiguity. Next, definitional section. All the definitions are under one clause. Example, section 2. All right, in any of the acts, in majority of the acts rather, most of the definitions are all kept in definitional clauses, and that is nothing but your definitional section, where all the definitions which are applicable throughout the act are covered there. Understanding? Next, illustrations gives you a sample of how to apply law. Yes, Yashaswini, there in the session. Proviso talks about what exceptions can I carve out from the general piece of law. Example, section 2, clause 71. Defines my public company. Public company means not a private company. However, there is an exception. If you are a private company, which is the subsidiary of a public company, that private company will be a deemed public company for the purpose of this entire act. This is what section 2, clause 71 is all about. Yes or no? This is about proviso. It carves out exceptions. Explanation. It gives me meanings. The definitions for a few words which are used in the entire act. Example, business connection, section 9. All right. You have your definitions which are there in section 9, subsection 1. Explanations give me the meaning of what exactly business connection is all about. Second example, explanation to section 43. In your Companies Act gives me the explanation to what is share capital, what is equity share capital, what is preference share capital. Next, schedules. It gives me the formats for the purpose of applying law. Schedule 1. Schedule 2, Schedule 3, Schedule 7, several schedules that we have seen. All right. These are the formats that you're going to use for the purpose of applying law. The last one, whenever you're reading law, it has to be read in entirety. These are the internal aids of interpretation. All right. Then we went on to understand a few words, 3 words: without prejudice, notwithstanding, subject to. What is without prejudice? Without prejudice means I'm not going to cut the generality of the other thing that I mentioned. First, whatever I mentioned, that will still continue. This is in addition to the first one. This is the meaning of the word without prejudice. Do you remember what we've discussed?
Yes, sir.
The second one is called notwithstanding. I don't care about what is there in any other piece of law. This will override that law. This is about notwithstanding. What is subject to? Subject to means this law is dependent upon the happening of some other law. That is the reference of the word subject to. When I'm saying section 43 is dependent upon section 1, is subject to section 1, example. That means 43, to have its applicability, you first have to go check section 1 as well. It is subject to the acceptance of terms and conditions which are given in section 1. Understood? These are the three words which we use when it comes to interpretation of statutes. Understood, everyone? Crystal clear? Yes. Now, let's go to your next chapter, which is the screen visible, friends?
Yes,
Yes,
sir.
sir.
Yes, sir.
Yes, sir.
General Clauses Act. All right, the last chapter, 200% focus. What is General Clauses Act? General Clauses Act 1897 talks about a law which can be used across various acts. All right, it can be used for every central legislation and regulation. This is the peculiarity of General Clauses Act. What is the objective of this act? This act is to shorten all the central acts. The second one is to ensure that as much as possible, we can maintain consistency amongst various central acts. This is the objective of General Clauses Act. I'm expecting a question here. Very, very important topic. Very, very important topic. There in the session, everyone? Yes.
Yes, sir.
Sir.
There. Kirtana there. Sri Guru there.
Yes, sir.
Subiksha. All right. Let's go ahead. When it comes to your application, is there a territorial clause? Answer is no. 200% focus. General Clauses Act does not have a territorial clause. What is the example that we took to remember this?
Touchdown.
It's the Hudstock. All right. It follows wherever the owner goes. Will it say, I will not come since you're going to Kashmir? I will not come since you're going to Karnataka. I have emotional connection. I'm going to come. No, nothing like that. It has to just follow the same way. I know, guys, it might be lame, but somewhere in case if you can remember these lame things, it is going to help you in getting that 1 extra mark, 2 extra mark, as the case may be. All right. So listen to me. When it comes to application of the act, it does not have a territorial clause. It is applicable wherever the central act is applicable. Wherever the central regulation is applicable, your General Clauses Act is also applicable there. All right. Does it apply to state act? Answer is no. But wait, whatever General Clauses Act that we say at the central level, there is a state General Clauses Act as well available for the state acts. Understood? What are the few definitions? We've seen, again, a couple of definitions that we've looked into in detail. 3 important sections that we see when it comes to your General Clauses Act. Section 3 talks about various definitions. All right. It could be an affidavit. It could be what is an official gazette. What exactly is the meaning of the word preamble? Couple of things which are covered here. Section 4 talks about whatever definitions you saw in section 3. Will it apply to the old acts as well? Because before General Clauses Act of 1897, there in the session, everyone?
Yes, sir.
Sir.
There were other acts as well of General Clauses Act. All right. There was something of 1880s, 1861. All right. Which was also to be considered. And now the question is, sir, whatever definitions that you've seen in the latest act, does it apply to the old ones also? Law says yes. Section 4A says yes. Whatever laws that you've seen, section 4 rather, whatever definitions that you've seen under General Clauses Act of 1897, those are applicable to your previous enactments as well. Understood, everyone? Understood, everyone? I repeat, Naman. What is the act that we are learning? General Clauses Act of 1897. There in the session, everyone?
Yes, sir.
Yes, sir.
Yes, sir.
1897, we had other General Clauses Act as well. We had other General Clauses Act as well. But the question is, sir, there these definitions were not there. Whatever definitions that we see now, these definitions weren't there earlier. So what do we do with? Law says whatever definitions that you see in section 3, those are going to apply otherwise also to those old enactments. As simple as that. Understood? Understood, everyone? Yes. The last one is section 4A. There are a few words which we use. Example, Consolidated Funds of India. What is the meaning of this? Sir, whatever revenue that I talk about government, where is that revenue going? When I pay taxes, where is it going? It's going to your Consolidated Fund of India. those are defined in your section 4A. This is all about your section 4A. Understood, everyone? Understood, everyone? Yes. Next. We've seen a couple of definitions are there. All right. Important thing. I'm expecting this question in examination. Good faith. What is good faith? All right. Anything which is done with honesty. Even though you were negligent, even though there was not much of diligence carried out, it is still going to be considered as good faith. But wait, there is a ruling of here, Mong Ong Pu versus Mong Si Mong. Sir, we'll not remember all this. You will. I'll help you out. Listen to me. Mong Ong Pu versus Mong Si Mong. There in the session, everyone? Yes. MAP versus
Yes,
MSM.
Sir.
MAP versus MSM. Mong Ong Pu versus Mong Si Mong. It's easy to remember. All the M's are same if you realize. All the M's are same. There's no other confusion. Easy to remember. Yes. Mong Ong Pu versus Mong Si Mong. I'm expecting this question. All right. So there was a question earlier as well. Here the law says, here the court says, just because you've been honest, but you've been doing all the things foolishly without even being careful, you've just been doing something for the sake of it. How can I approve it? Not acceptable. Something done honestly, but negligence is there. That is not good faith. I want diligence as well when it comes to good faith. Whenever there's a question on good faith, you will have to write both of it, or else your answer is incomplete. I hope I'm clear, everyone. I hope I'm clear, everyone. Understood? The next point, we saw a couple of definitions. All right. Section 6 talks about repeal. The moment an act is stopped being applicable, that is called repealing an act. Example, the moment 2013 Companies Act came into picture, 1956, is called the repealed enactment. All right, that is called the repealed enactment. Understood, everyone? Yes. Now, what does law say when it comes to section 6? It says, sir, whatever you've done under the old act, the repeal will not revive anything which is not enforced or prevailed during the period at which the repeal is effected. In simple terms, sir, it is not going to affect something that has already been done. That will continue as it is. All right. Second thing, prior management of any legislation that is repealed will not be affected just because you've repealed it. Whatever I've done earlier, can you say now that is also not going to be effective? Just because 1956 Act has been repealed, now whatever I've done under 1956 Act, that will not continue any further? Wow. The answer is 100% you can't make this statement. It will not remain affected. Just because you have repealed, it will not be affected because of the repeal. Whatever management was there, that will continue. Sir, I was a debtor under 1956 Act. I will not remain a debtor under 2013. Assume I am not repaid. Will I stop being a debtor of yours? You will chase me to grave. All right, I'm sure. To ensure that you recover the money, you will chase me to grave. The whole point is you follow this seriously. Repeal will not affect claim, privilege, debt, or responsibility which was given. It will not affect any of the punishment, forfeitures, or penalty. Sir, just because 1956 Act is not there, whatever penalty was imposed under 1956 Act, I'm not liable for it anymore. Can I say this? Answer is no. It will not get, your repeal will not affect the punishment. That will continue as it is. Read it together. Read it together. Repeal shall not affect any inquiry or litigation or remedy. All right. That will continue as it is until it has been resolved. If there is a case going on under the old law, can I say that will not be effective any further because that case should be dropped because the new enactment has come into picture? Why did you file the case itself then? Understanding, everyone? Understanding, everyone? Yes. So this is under section 6. Section 7 talks about revival of the repealed enactment. Let's assume UPA comes into picture again. They are saying we don't want to follow Companies Act 2013, bring back 1956 itself. What am I doing? I am reviving, I am giving another birth to the repealed enactment. Law says you do whatever you want. Give me the purpose of it. Why are you reviving it? Like this, if I give, there will be everyday new government and everyday new enactment will come into picture. I don't want that. Give me the purpose and then you can revive it. Understood, everyone? Important from exam perspective. Then section 9 talks about commencement and termination of time. Whenever there is commencement and termination, wherever you're using the word from, that day need not be counted. Wherever you're using the word to, that date has to be counted for the purpose of your commencement of time. Understood, everyone? Example, from 1st June 2023 to 30th of June 2023, you need not attend any of the sessions. Assume. All right, look at that wide smile. God knows where my chartered accountancy friends are going towards. Nevertheless, all right, here, first will not be included, but 30th will be included for the purpose of calculation of days. Understood, everyone? Understood, everyone? Effectively, it is going to be the same. Don't include both. I hope you're understanding. Don't include both for the purpose of calculating time. I hope I'm clear, everyone. Understood? Yes. Next one. Computation of time, something that I've already discussed. Next, extremely important, measurement of distance. All right. Whenever we are talking about measuring distance, aerially is not the word which has been used. I repeat, and I'm betting on this, even though I'm telling this, maximum of you will write an examination measurement of time. Distance means you have to measure it aerially. 1897, my great-grandfather or your grandfather, great-great-grandfather invented something to measure aerially. How is it possible? I hope I'm clear. Use your common sense. Worst case, if you're planning to write this, use your common sense. In 1897, your grandfather or my grandfather didn't even have a bullock cart. Forget about that is being exaggerated, but coming back to the point, section 11 says, whatever you do, all right, it should be very, very important. It should be measured. Whenever you're measuring distances, it should be done on a straight line on a horizontal plane. All right, it has to be done on a horizontal plane. Now, because of this horizontal plane, we have concluded aerially because that's easier now. But aerially is not the language used in law. Even after mentioning this, if you write aerially in examination, trust me, if the evaluator is cranky, he's going to scratch your answer. Because this is not even the language which law is using. It is just convenience based because of the development of technology. We've been doing it aerially. That is the horizontal plane that we can map. I hope I'm clear, everyone. Understanding, everyone? Yes. Section 13 talks about gender and number. All right. Your gender, masculine includes feminine and plural includes singular or vice versa. This is coming from section 13. Very important. Section 20 talks about whenever you're reading any law, all right, whatever circulars, notifications, and rules are enacted, that has to be read together. And if there is no meaning coming in those documents, you go to the act, and the act, whatever language, whatever definition has been used, that definition will apply to your rules as well. Understood, everyone? Yes, I repeat. So let's assume they've used a word in the rules. I don't know. They have not given the definition of that word in the rules. What should I do? Go to the act, figure out the meaning from the act, and that will be applicable to the rules as well. Understood? Yes. Next one. Can rules be effective before the act is passed? Answer is no. All right. Even before the act is passed, rules cannot be effective. Very obvious. Understanding, everyone? Understanding, everyone? Yes. Next.
Yes, sir.
One mistake, 2 penalties. Is it possible? Answer is no.
No.
You can be tried under both the laws, but penalty is going to be only one. This is what section 26 is saying. I repeat. All right. Let's assume Achal there in the session
Yes, sir.
has done a blunder. All right. He has done a blunder and he is covered within an offense under Income Tax Act. I hope you don't mind. Achal. Yes, there in the session.
Yes, sir. Yes.
Everything on a lighter note, guys, goes unsaid. So let's assume there's an offense under Income Tax Act as well as under your Indian Penal Code. You will be tried, a trial will be carried out, you will be tested, everything will be checked under both the act. Case will be filed under both the act. But penalty can't be twice, it is going to be only once, and this is what section 26 is all about. Understood, everyone? Crystal clear? Yes. Next, meaning of service of post, important from exam perspective. This was also asked in one of the attempts. Section 27 defines how do you serve. First, it has to be addressed appropriately. It has to be prepaid. It has to be prepaid. Someone is sending post to you. Remember, you might not want to have a cash on delivery. You are getting the post. I hope you're understanding. Now, no one will want cash on delivery. They would want the person who is sending to prepaid. That's what law is also saying. All right, it has to be prepaid and it has to be through your registered post. Extremely important. That no wonder whenever you're sending something to ICI, we send it through a registered post. I'm not sure how many of you are aware of it, but we send it through an RPAD. I'm not sure how many of you are aware of it. RPAD is with the acknowledgement due. I hope I'm clear, everyone. Understanding? Yes. So the whole reason why we do it that way is because of section 27. It says clearly you have to send it through a registered post itself. Next, application of act to the ordinances. Very, very important. Does the act apply to ordinance as well? 100% it does include your ordinances. Whatever general clauses act that we've seen, does it apply to an ordinance is the question. Does it apply? Answer is yes, it does apply. What is an ordinance? Ordinance is the law which is passed by the president in the non-functioning, where non-operation of the parliament, but something has to be passed suddenly. I can't wait for the parliament to resume. In that case, I will be passing an ordinance. Who will pass it? It's going to be the president. Understood, everyone? Understood, everyone? Classic
Yes, sir.
example. Classic example, COVID. Your taxation ordinances were passed by the president during the COVID. I hope you understand, everyone. All right. Does General Clauses Act apply to it? Yes, it does. Yes, it does. Crystal clear with the concept? Yes.
Yes,
Yes,
sir.
sir.
With this, we come to an end of your syllabus. All right. We've looked into each and every chapter. Of course, share capital is one, which is open. Let us quickly see that as well, so that you get the complete coverage of the syllabus. I might be extending it by another 5-10 minutes. I hope that's okay with everyone.
Yes, sir.
Yes, sir.
Immediately after share capital, we will be spending 5 minutes, 10 minutes on how to go about with your preparation. Sir, all said and done. How much ever you have heard, until and unless you can read, however you can remember, how do you have to present it? That's even important. That's equally important, or rather that's more important. So let's get started. Let's spend 5 minutes on share capital as well. Is the screen visible?
Sir.
Yes, sir.
Yes, sir.
Share capital and debentures, important from exam perspective, goes unsaid. All right. This chapter in your examination, 43 to 72 is share capital and debentures. 71 is the only section which is applicable for debentures. So I'll make your life easier. Any question in debentures? Any question on debentures? Give reference to section 71. Because they can't ask question from 72. It's not there as a part of your syllabus. I hope I'm clear. You get 1 mark just for writing that. Now, mind you guys, they're asking you journal entry of debentures and you end up writing just section 71. God save you. All right. Now, section 43 to 70 is applicable on shares. Very important. 44, 45, 60, 65, and 72 not there in your syllabus. We understood what exactly is equity share. We've just discussed, just now we have seen the definition of the word equity share capital and preference share capital. We see section 46 is all about certificate of shares. Very important. It's a title of your evidence, or rather evidence of your title. It talks about you being the owner of the share. Then we saw how it has to be issued in case of unlisted public company. Very, very important. It has to be only through your demat form. If you are an unlisted public company, MCQ, Anakha Limited, an unlisted public company is of the opinion that since it is not listed on any of the stock exchanges, it can have shares in a physical form. True or false?
False.
False.
No second thought. If you are an unlisted public company, you have to go ahead and ensure that the shares are in demat form. Anakha Private Limited is a company of the opinion that it is not listed on the stock exchange. Therefore, it can go ahead and issue shares in physical form. True or false?
True.
Most of you thinking, sir, same question, right?
Private companies.
False.
Two different questions altogether. Unlisted public company, no option. You have to go ahead and ensure that the shares are in demat form. If it is a private company, is this applicable? Answer is no. It is not applicable to a private company. I hope I'm clear, everyone. All right. Understand? It is not applicable to a Nidhi company, government company, wholly owned subsidiary, and private companies. 4 categories to which you don't have to maintain shares in demat form. All right. Expecting a question here. We went on to understand voting rights. Section 47, subsection 2 says, sir, every shareholder is going to get a voting rights. There are 2 types of voting: uniform voting, differential voting. We've discussed this as well. All right. So we know what exactly is a DVR, what is a uniform right. Do preference shareholders get a voting right? 100%. Yes, they get voting rights only on those matters which directly affect them. Second thing, on all those matters which are pertaining for winding up of the company. Second matter. Third matter, on anything where there is a reduction in the equity or preference share capital. On these 3 matters, they will get a voting right. First, anything which affects them directly. Second, winding up. Third, if there is a reduction in capital, which capital, equity or preference, I don't get, preference shareholders will get a voting right. Understood, everyone? Yes, sir. We saw voting rights. Then differential voting rights under section 48. We saw the variation of terms. In case if there is any variation, ensure that you take the approval from the members. If members don't agree to your variation of shareholders, right, they have a right to go to the tribunal. You will have to give them an exit offer in case if they are not agreeing to any of the changes. This is on the terms of voting rights. Section 49 talks about calls. Whenever you're making calls, it has to be on uniform basis. This is what section 49 says. All right. If you're belonging to a particular class, all the calls has to be made on a uniform basis. Section 50, sir, although I didn't call, but the member is paying, can I still accept it? Accept it. And that will be called as calls in advance. All right. Then section 51 talks about payment of dividend in proportion to paid up capital. Always a confusion, even in accounts while you're solving questions. 51 says paid up. You might be solving a few questions in accounts and advanced accounting where you might be taking it as a percentage of issued capital or face value as well. It is up to you, give your assumption, but 51 says it is going to be a portion of your paid up capital. 10 rupees share, 6 rupees paid up, dividend declared 20%. On what are you going to calculate?
6 rupees.
6 rupees.
Paid up capital, 20% of 6 rupees. I hope I'm clear, everyone. All right, 10 rupees share, issue price 1,000. 600 called up. Corresponding amount is going to be 600, out of which your calls would be of 6 and 594 is going to be a securities premium. Just pay attention, everyone. Understanding? 20% dividend declared. What are you going to calculate on? 600 or 6?
6 rupees.
Is it going to be 6 or 600?
6.
6
rupees.
6 or 600? Anyone saying 600? Crystal clear with the concept. It is
Yes,
a
sir.
proportion of paid up capital. All right. It is not a proportion of the amount that I raised from them. 600 has securities premium in it. It is not paid up capital. How much is the paid up capital? Paid up capital is only 6 rupees. Only 6 rupees is going to be considered as paid up capital. The rest is your sitting in your securities premium account. Understanding, everyone? Understanding, everyone? Yes. We went on to understand section 52, which talks about your securities premium. How are you going to use it? Where are you going to use it? My BP row, seeing your DP with books. We have already discussed this. Section 53. Can I go ahead and issue shares at discount? Answer is no, you cannot. General piece of law, no, you cannot. Exception in case if it is very important under section 54. 54 talks about sweat equity shares. Whenever you're giving any sweat equity shares, it has to be very important for the purpose of the sweat that you've given to the company. All right, Ritwik. It is going to include your directors or employees of the company. Directors or employees of the company. So there is a possibility of a director not being an employee as well. They are called as the non-executive directors of the company. Understanding? Yes, Ritwik, they're in the
Yes,
session.
sir. Yes,
So
sir.
this entire section 54 is revolving around issue of equity shares. Then 55 talks about issue and redemption of preference shares. Accounting paper 1 already discussed. 56 talks about transfer and transmission of shares. Transfer, where I voluntarily transfer the shares. All right. That is called as transfer. What is transmission? Because of the operation of law, if the shares are being transferred to another person, that is called as transmission of shares. Then section 58 talks about refusal of registration. Sir, I have gone to get my shares registered, but the company is saying we are not going to register. In that case, you can file a case against the company before the tribunal since they are not accepting your shares to be registered. Tribunal is going to either ask them to register or they are going to give the directions accordingly, whatever is relevant. Then section 59, rectification of the register of members. Whenever there is a requirement of rectifying the registers, there might be a name change, there might be any address change or anything which is significant. All right, that change, you may go ahead and request the company to rectify. If they don't, then that appeal can also be filed before the tribunal for the rectification of register. Section 61 talks about power of the limited company to alter its capital. Whenever capital has to be altered, whatever the alteration could be, it could be a split, it could be a consolidation, whatever is the combination, special resolution has to be passed. Whenever there is a special resolution, form 14, MGT 14 is also going to come into picture. Remember, everyone. All right. Section 63, issue of bonus shares. Chapter 6 of your accounting 1 is discussing about this. Section 66, reduction of share capital. Chapter 6 of your advanced accounting is discussing on this. 70 talks about buyback, prohibitions of buyback. There in your syllabus. 71, chapter 8 is in your accounting, which talks about your entire debentures as a chapter. With this, we've covered almost whatever 120 hours that we've spent together, or maybe more than that. We've covered in last 2.5 plus another 1.5 hours, 4 hours. I hope I've done justice to your time more than anything else. All right. So what we do is I will take another 5 extra minutes. Instead of discussing whatever examination that you've written, those tests that you've written, we'll figure it out. How do we resolve that as well? But right now, let's see how to approach this entire paper at a macro level. All right. So that it will give you some insight on how to go about with your preparation. Is the screen visible?
No, sir.
Not yet.
All right. I'll quickly go through these points. I might have gone through, and it might be something that you might have come across as well earlier.
Yes, sir.
Is the screen visible now?
Yes, sir.
Yes, sir.
All right. So it is more from the auditing perspective, which I made. Doesn't change. Nothing is going to change. It is still going to be the same. All right. This used to be something for auditing while I was managing a little bit of your audit syllabus as well. Now, coming back to the point, when it comes to your syllabus, all right, important first thing, ensure whenever you're reading law, whichever chapter, first it is going to be your study material, whichever point which you come across, which you think it could be a one-word answer, which could be a numerical, ensure you update your CAPS material with that law in case if it is not there. All right. There's a possibility that it might be, say, special resolution has to be passed or unanimous resolution has to be passed whenever there is any, say, entrenchment of articles, or it could be anything of that sort. Whenever you come across these kind of particular things, you update your CAPS material, and it has to be your, every page should have one page of one possible question or one MCQ on every topic that you can think about. Why? If you have covered all the possible one word. Now, please remember, when it comes to MCQ, they can't ask you to sit and write answers, right? It is just going to be the Rangoli competition. At the end of the day, you have to ensure that you know they will ask MCQs from those exceptional prone areas. Ensure that you spend some time and you update one page. After every chapter, you put in efforts in ensuring that you have a list of 15-20 MCQs on every chapter. All right. Mostly, if you see in your CAPS material, we've done that extra effort of giving you extra important questions on every topic. All right. If you go see your law paper, I myself designed it. So if you see after every chapter, you will find questions in examination that can be picked. But having said that, I want you to do something extra for yourself. You find out while you're reading, if you come across something which is which could be an MCQ, you don't have to frame an MCQ. Just write that one piece of law, maybe in your keywords in that one sheet. With this, you save yourself with 30 marks MCQ. Let's assume all the 30 that are coming in examination might not be a part of your prediction. Even if 25% of it, whatever you have predicted, I'm not even giving anything more, 1/4 of MCQs are something that you had read or you've come across and it was a part of your list. I don't think there can be any better deal. All right. 25% of MCQ, you're already sailing through. 75% you might have read somewhere. You might not have noted in the list, but you might have come across, so that you are going to sail through. First important point when it comes to MCQ. Second, whenever you're reading MCQ, ICAI will frame it in such a way that you end up wasting time. It's obvious. They don't want anyone and everyone to become chartered accountant. Very obvious. Although you might be capable, but it's the cream that we are looking for. Who is the cream? You. You'll have to make yourself the cream. It's not that we are born with it. So you'll have to work for it. Now, the whole point is when you're reading MCQ question, listen to me very carefully. Last sentence first, then read the entire MCQ. I repeat, this is the principle that you follow. Whenever you're reading an MCQ, you read the last sentence first, and then you read the entire question. I'm not asking you not to read the question, but I'm just framing the context while you're reading the question. Let's assume there is a question on special resolution. Sir, there are so many topics which are revolving around special resolution. How will I get to know what it is? You read the last sentence, you'll get to know special resolution in case if it is a change in city. All right. Special resolution if I'm changing my articles of association. Read the last sentence, you get a fair idea of it. Then you read the entire question, you get the concrete thought of what the entire context is all about. Will save time. Will save time. How? When you already know what the question is revolving around, your thoughts will be aligned to only that particular zone of thinking. All right. That particular area of thoughts, it will not be widespread across when you're reading the question. I hope I'm clear. Everyone understanding MCQ, this is the approach that you're going to follow, and this can be followed for anything and everything. Next, whenever you're reading law, all right, it might have a plethora of pieces of things to cover. Example, what is to be covered in a prospectus? Read everything. Read everything. You should know everything. But if the question is a 4-marker, do you really want to write everything? Answer is no. It is going to be only 6 points. If it is a 4-marker, 6 points. Why 2 points extra? Because you will have to save yourself. Just in case if any of those are missing with the keywords, at least your extra 2 points are going to save. Now, please note, this is relevant only in case the list is not exhaustive. If the list is already exhaustive, you have no option but to write everything. Example, DRS. You don't have an option of writing only 4 there because you have to ensure that every board report DRS has all the 6 points or else it is incomplete. In that situation, please write all the 6 or else any question in examination, write short note. If it is a 4 marker, you have to write only 6 points. Next, how do you write answers? Should it be in paragraph? Just because you read General Clauses Act, it has to be in paragraphs? Answer is no. It has to be in bulletin points. Every answer, every point must have 2 things. 1, side heading. 2nd, keyword being underlined. No one on earth has so much time to sit and read entire Mahabharata. They are looking for snips. Just give the keywords, and keywords may be there in the subject or it may not be there. If it is not there, you identify what is the keyword. All right. You identify what is the keyword. Classic example. All right. Let's assume I am shifting my office from one state to another. Whenever there's a change, approvals are required. So you just write side heading approvals, 2 points. First one, approval of the central government, as the case may be. Second one, central government has given this task of approving to the registrar of company. Third, special resolution has to be passed. Fourth, NGT 14 is going to come into picture. As simple as that. Understanding everyone, crystal clear with the point. Every bulletin point must have a keyword underlined. What is keyword? Something which is extremely important in that entire sentence. That is called keyword. My point being, the other person is a human being. You will have to respect that and accordingly serve your answers. The easier you make his life, the better it is going to be for you, not for him, for you. He's not getting into the details there. Just in case if he starts reading your answers, you know what you have written. I don't have to get into details any further. That understanding everyone? Yes. Next, whenever you're reading, all right, give every answer, very important. Whenever you're reading, any answer that you're writing cannot straight away jump into the points. Please give 1 line at least of introduction. All right, 1 line of introduction. Next, you're going to ensure whatever points you want to write, your main points. Let's assume 4 points I want to write. All right, 4 sections I want to refer. Give those 4 points here. All right, this is the pattern. And the last one, every answer should have a conclusion. Every answer should have a conclusion. What is the conclusion? There's a possibility that you might end up writing the introduction itself as conclusion. Possible. Don't worry. Give it. There's at least a pattern. There's at least a flow of thoughts when someone is reading your answer. I hope I'm clear, everyone. Understanding? Yes. Next point. When it comes to your entire discussion on law, how do you approach this paper? Very, very important. Write 2 mock tests at least. Write 2 mock tests at least. I have ensured to give you mock test at least. If I'm not wrong, during our sessions itself, we've written 3 or 4 mock tests, if I'm not wrong. All right. Minimum 3 mock tests. So the latest itself, we have 2. Earlier, we've had another 1 or 2, if I recall. All right. So at least 3 mock tests we've had. You write for entire 100 marks. That's when you will be able to finish the syllabus and start attempting questions accordingly. Please ensure you scribble with 1 pen before you start writing the test. All right, you just scribble it in a piece of paper. You are writing a mock test as if it is going to be your final examination. Does it help? You will realize when you do everything, all the blunders possible during your mock test, you will realize that you might not want to continue those, at least during your examination. You might not want to repeat those. Do all possible blunders. Extremely important. Just writing mock test does not end your life. All right, just does not end the entire discussion there. Ensure that you are correcting it and you make a note of all the mistakes that you've done. Take another piece of paper, write down all the mistake question wise, where have you gone wrong, so that you don't do the same blunder. Example, I have not been giving section numbers whenever there's a topic of General Clauses Act. That means while I'm preparing for examination, I have to give extra focus on section numbers from General Clauses Act. Most of us do this blunder. General Clauses Act, take it so generally that don't even give it a reference to the section numbers. You'll lose out marks there. You'll lose out marks there. So every section that you've written, every answer that you've written, please make a list of mistakes that you've done. Are you understanding, everyone? So that you don't repeat it. So that you don't repeat it. Now, all this sounds so much to do. Not more than 15 minutes you're going to spend. And it is going to save you 3 hours. I hope I'm clearing. I'm at least clear on all of these points that I'm talking about. Understanding? This comes to your syllabus. All right. Pay attention, pay extra focus on your allied law. Goes unsaid, allied law has to be there at the tip of your tongue. 40 marks, 4 chapters. What else can you ask for? 40 marks, 4 chapters, and all chiller topics, all chiller topics. ensure you put extra focus on those 4 chapters. If you've read company law twice, ensure you read allied law thrice. 40 marks at stake. How do you approach? Finish 3 chapters of company law. Immediately switch to allied law. Don't read entire Companies Act together or entire allied law together. Don't do this mistake. You will get bored of the monotony. You will get exhausted of the monotony. I hope I'm clear. All these things might sound fancy right now, but it is going to cost a lot later on. I hope I'm clear. Understanding? Yes. Pay extra attention on Indian Contract Act. I'm expecting questions this time from General Clauses Act and interpretation of statute. A lot of questions from these 2 topics, because these have been undermined to the core. This time they will pick it up. This time they will pick it up. Pay extra focus on Indian Contract Act. I'm sure you might be thinking, sir, almost everything you've covered. So I hope you realize there are only 4 chapters there. All right. I hope you realize there are only 4 chapters. So pay extra attention on all the 4 chapters. Goes answered. All right. Deposits, dividend. Deposits, dividend, management and administration. Don't enter the examination hall if you've not read these 3 chapters. Don't enter the examination hall if you've not read these 3 chapters. If you're reading all the chapter twice, read these 3 chapters thrice. Deposits, dividend, management and administration. 3 chapters must be there at the tip of your tongue. Questions will come from here. Imagine 4 chapters of your allied law, and these 3 chapters, if you've done extremely well, you will sail through the entire paper. You will not need anything else. Though that is not our target, but those 4 chapters and these 3 chapters, more than enough, you'll sail through the paper. Later on, whenever time permits, do pick up your RTPs, do pick up your mock test papers or your past examination question papers. You will realize whatever I'm talking, these 7 chapters, if you aggregate how many marks it is going to fetch, just do a little bit of valuation there, you'll get a fair idea. You'll realize that approximately 60 marks from these 7 chapters. I hope I'm clear. How 60, 40 marks by default, allied law is going to give. These 3 chapters will fetch 30 marks. These 3 chapters will fetch 30 marks. I hope I'm clear, everyone. Understanding? Understanding? Yes. The last 2 or 3 points that I want to quickly remind you of. I personally believe in this whole concept of subconscious mind. You are doing what you think you are doing. All right. Now you might be thinking, what am I doing? Or you might be thinking, what is this guy saying? You think negative, you'll attract negative. If you think I will not clear this examination, you are bound not to clear. If you were to ask me, you should not clear. Because when you can't trust yourself, how on earth do you expect the world to trust in you? Your past, whatever you've done, you might be a scholar, I don't care. You might not have scored well, I don't care. Can you change from here? Ask yourself. Can you change from today? Can you change it from now? Ask yourself. If yes is the answer, please start pushing yourself. Guys, if you can't believe in yourself, no one under the sky is your relative. No one is your under the sky is going to be your relative to push you hard to start believing in yourself. Everyone has better things to do in life. Start believing in yourself. There's something called a subconscious mind. It works. It works. You attract what you're doing. You attract what you're thinking. So start thinking appropriate itself. Why do you want to think about what if I fail? Rather start thinking for clearing, what should I do? That's easier, right? That's easier, right? I'm not asking you to think about after clearing what you'll do. No, I'm asking you for clearing, what should you do? That's more than enough. Ask this question and you'll start getting answers instead of thinking what will happen if I fail. Doesn't make sense. I hope I'm clear. Last point, guys, ensure you have one edu buddy, whatever you call, right? That whole concept that we have in CAPS, 100% important. 100% important. How you ask yourself, whoever that one person is, figure out, preferable to have within your own circle, preferable to have within your own touch, so that you can go ahead, talk things to them, ask them, discuss things with them. And if you both are on the same page, or you are both having the same context, how we have discussed during the session and all of it, it becomes easier in discussing. It becomes easier in preparing. One thing which I suggest, please ensure you discuss on a weekly basis. Please ensure you follow some timetable with that person, and preferable to discuss every week, where do we stand. It will push you, in case if you find that the other person is ahead of you, it will push the other person to find that you are ahead of them. Irrespective, both are being mutually benefited out of it. discuss probably every call, discuss something in common. Example, let's assume this Friday, this Friday we have agreed upon a call at 9 o'clock in the night. Assume we are going to discuss all the section numbers of chapter deposits, just the section titles. We are not going to discuss the content, just the section titles. Can we do this 100% on earth? How much time will it take? Not more than 10 minutes. You sit and gossip about entire world. Rather, you start talking about all this. This will at least make sense and get you closer to your dream. That will make sense. I hope I'm clear. All right. You pick the topic. It could be anything. It could be accounting standards. It could be standards on auditing. You figure out every Friday or every Thursday, whatever is convenient for you guys. Ensure that you discuss and push yourself as much as possible. Having one buddy around is going to be of huge benefit to you in your examinations. I hope I'm clear. Stay away from distractions as much as possible. Whatever you call is distraction, it is something which is so variable. What distracts you might not distract me. All right. So you figure out what is distracting you. Stay away from them for the next 6 months. 6 months of efforts will get you at least 2 or 3 years ahead of life. 6 months of effort will get you at least 2 or 3 years ahead of life. All this will make sense moment you clear. All this will sound nonsense the moment we see ourselves somewhere in the back seat. I'll leave it to you. Take conscious calls. Be mature enough to take calls for yourself. Don't get carried away by emotions. All those emotions that you might have right now, it's an age, I understand. But at the same time, don't get carried away so much that you might repent later on. All right. Ensure you just get closer to your dream, whatever your dream is. Push yourself harder. Figure out that one thing which pushes you every day, every second, whatever it could be. It could be your parents, it could be your mom, it could be your dad, it could be any of your faculties. You figure. It could be your friend, it could be your any one person. Ensure that somewhere you're just thinking about them. That will help you getting closer to your dream. Although you're not doing it for them, you're doing it for yourself. But somewhere there will be a push. With this, I come to an end of my session. Thank you so much for bearing with me for the last 2 hours after a meal. It's not easy to sit and listen to a theory subject. I completely respect the fact that. And in case if there's anything that I can be of use, please drop in mails. I will revert. Of course, goes unsaid. It's not going to be that the moment you mail, I'm going to revert. No, I'll take some time, but I'll revert to all of your points. All right, all of your queries. I come to an end. Thank you so much. Have a great day, guys.
Thank you, sir. Have a great day, sir.
Thank you so much, sir. Thank you so much.
Thank you, sir.